Hello traders, my name is Lokesh. I welcome you to the channel Nifty Forecast. Here is a quick disclaimer about our channel. It is all the content of this video, all the content uploaded in this channel are purely for educational purposes, and one should always do own research or consult an authorized personnel for taking positions into the capital markets. I am not a SEBI registered financial advisor. Please keep this in mind, and I would always request you to plan your own position sizing, do your own research, or consult your financial advisor and take positions. All the best. Let's get into the topic. Alright, so I am an active index trader. I would prefer to trade index options, sometimes intraday, sometimes positional, but yes, always hedged. That's the only instrument that would save your life from deep risks in the financial markets. So this is one of my account that I would actively take care of day in day out, and I started with a capital of 25 lakhs. And let's get into the Nifty chart directly. And with this video, I would want to bring in some insights as to how the day went, as in what happened in Nifty, what happened with the options, what were FIIs doing, what were DIIs doing, and from whatever information we derive, we will try to make a decision, or we try to plan for what is happening our tomorrow, and we'll keep it ready by the time market kicks off at 9:15. All right. Okay. So what does the broader market tell us if we look at the day chart on Nifty? Although it is showing an uptrend, I mean, from a layman's perspective, if you are able to put a straight line from the bottom to the top, so you will be able to see that the trend is upside, but yes, there is always corrections in the market. So here we are from 15,437 to sometimes 14,100, and then now we are in a sideways market, to be precise. But yes, the other day, what happened the other day? It was on Friday, we were able to see a lot of shorts being added. And if I had to sum up the FIA data, or the participant wise open interest in the futures and derivatives segment, I was anticipating a huge downside. In fact, uh, I have just created a Twitter handle as well, and I mentioned very clearly that Nifty is likely to open higher only because of the global positive cues, and will attract more retailers for a trap. It is a blind buy of ATM put on 17th opening and sit tight for a minimum of 1:1 return. I was very confident about the view that I have taken after looking through a lot of information available on public domains, like NSEindia.com releases data or reports end of the day every day. So after thoroughly going through those reports, I was very confident that Nifty would certainly jump. I mean, jump as in it will fall down, and that is what precisely I have posted on my Twitter as well. But yeah, markets are always full of surprises. Eventually, what I had to do, I was ought to do, is to just mention a follow up in my Twitter handle that it is going to be a positional buy from a sell. So it is a warning sign that I have posted around 12 o'clock, that it is a warning sign to reconsider your view. Maybe it could be a positional buy from the sell view that we had uh, last week. So it is very important to be adaptive in the market, and you must always be hedged to save from big mishaps. All right. So I of course had a negative view, and I had about 6 lots of Nifty short. That is 14,900 PE long, along with 14,200 short. That would give us a return of 1:2 risk reward. Uh, that was the position I precisely had for about 300 quantity, and eventually I had to close that position and take a bullish position, because I knew it for the fact that this is not the day for sticking to my view, because there was massive puts written, and on the contrary the calls are being bought. All right, so that said, I could barely close the day with neck to neck profits, as in there was no profits or no losses for the day. All right, that is a part and parcel of the game, but let's see what do we see from the reports that we get. All right, let's go to the participant wise open interest report that we download from this is the participant wise volumes, which shows that these many number of contracts have been traded in long, index long, and this in index short. So this will give us a heads up figure on the long contracts versus the short contracts on index. And if I had to look at the cumulative perspective of all those players who had well established systems, like you know an automated system that is well defined to take positions as per their interests. So these guys, DIIs, FIIs, and pros are those guys who have those systems in place that will automatically do the trading on their behalf. All right, so I would always want to consider all these three participants when making a active decision, and would plan it accordingly for the next day's activity. All right, let's go into it. These are the number of long contracts. If I click on it, you will be able to see that these are the long contracts, these are the short contracts in index. Very I am very focusing on the index. All right, so if I sum it up, so if I subtract the long contracts minus the short contracts, I get to see that this is the figure 12210. So these are the net positions for the day. I mean the intraday volumes. So all right, let's go to the participant wise open interest after going through the data here available on the intraday volumes. Okay, here is the participant wise open interest that is still available end of the day. So this shows that these contracts, these open interest is still carried forward for next day as well. So what do we get to understand here? There is these many contracts in long position by DII, FI and Pro, and these many contracts in short position by DII, FI and Pro. So if I subtract, do the math, I get to see that 69,789 contracts are on the short side. To be precise, these many number of contracts are more than the long contracts. So if I had to sum it up, the short contracts are dominating. So if I go back to my Twitter handle, and if I had to reconsider what I mentioned, and if I had to give a final conclusion after looking at the end of the data today, I would still stand by my word that is posted in the first tweet, that index is looking for a big fall, nothing less than 1000 points or even 1500 points from the top. But yes, it is very important to understand what is top. How do we get to know what is top? So here, am I saying this is the top? No, I would never want to give any targets for index, unlike many traders or many analysts, because these merry VWAP or moving averages, SMAs, that doesn't really help on a long run. You just need to understand what the market participants are doing, and you must be able to take a quick decision on your positions. That's it. I mean, that is the only thing that actually works on a long run. All right, so I am not a technical person, but yeah, I would always use a straight line to understand what is the trend. If I put a straight line from here to here, I get to understand that it is a long term bullish trend. And again, if I put a line from here to here, I get to understand it is a short term bearish trend. So it is very simple. And if I had to also tell you very clearly about the institutions, the pro or FII or DIS, do you think they have time to do that calculation of Elliott wave, or do you think they will look at the exponential moving average or any kind of moving average? No, they don't really have that time. All they have is established systems that will understand the risk, that will gauge where the market is going that particular day, and they also have enough money to drive the market as they want. All right, so I'm not that technical guy who would go into SMA, VWAP and all that, but yeah, to some extent it is VWAP that actually works in the intraday. All right, so that's a quick overview about Nifty. Intraday option chain, what happened? I'm sure we have already discussed that. There is a lot of puts that are written, and calls which are bought. So I will quickly show you one of the tool that I have created myself to study the option chain. So this will show you about uh, the number of op calls or puts. In fact, this will show us change in open interest, calls and puts, at the money and out of the money, not in the money. So I use a few strike prices to understand the market, and as per my desired interests, it has been written. And I see that a lot of calls are written, a lot of puts are written. I'm sorry, a lot of puts are written, and they haven't really exited. That is very important. That means even though if the market opens negative, I'm not telling you that it will open negative, but even though if for any reason if the market is opening negative, market as my word, these players, potential players, will pull it up until their positions, until the puts that they have written today are met with minimum requirement, or they have to exit at a minimum profit or at least a break even figure. All right, remember this will happen. But yeah, market doesn't look like it will open a gap down tomorrow, but in the worst case scenario, that will definitely happen. That is how I look at the data at the moment. All right, let's go back to our Nifty chart. So that's a little about option chain that I look at, and I have already given you a few pointers to make a note of for preparing your trading day tomorrow. So I would still look at the market as a slightly bullish thing, as in now that it has got enough punch from the bottom. Even if it had to stop, I mean, let's say the train is traveling at 120 speed, 100 kilometers every hour. Even if you apply brakes, I'm sure it will have to go someplace. I mean, it will go a few more 100 meters and then stop. It wouldn't just stop there. So, the Nifty is still having a little juice left to the upside. But trust me, it is all about trading the pullback. I'm sure you all must have listened to this uh, concept of trading the first pullback. Although it is not a first pullback, if I had to sum up, the first pullback happened somewhere in the month. I mean, this could be a potential zone that we could have talked about trading a potential pullback. So this day or somewhere in the month of March, there was an aggressive exit in the long positions by the major market players. So all these upsides, small little upsides, are just a trap. Even in my tweet, I have mentioned puts are massively written and calls are bought. Nifty will run a little from here before doing the bungee jump. Bungee jump as in jumping down, all right, over the cliff. So be prepared for a roaring red candle before expiry. My next tweet only after a big red candle. Friends, this is my analysis. So you plan your positions and take trades wisely before taking positions. I would strongly recommend you doing a research on any of the positions that you plan to take, and it is better to take a financial advisor's help, qualified financial advisor's help, to take positions into the market. I am sure you are aware of the risks that market will present you. It is always full of surprises. Alright, so if you like the content that I posted in this video, please comment in the comment section and also share it with your friends and trading fraternity. It can be anywhere. I would strongly insist sharing it among your traders fraternity, and yeah, support me. Thank you, people. Bye bye.